In this video we will discuss about operating expenses, also known as OPEX.
What are operating expenses?
Operating expenses, operating expenditures, or OPEX, refers to the costs incurred by a business for its operational activities. In other words, operating expenses are the costs that a company must make to perform its operational activities. Operating expenses are essential for analyzing a company's operational performance. It is therefore important for both internal and external analysts to identify a company's OPEX, to understand its primary cost drivers, and assess management efficiency. The operating activities primarily cover the commercial activities of the company. For example, the main operating activity for a manufacturing company is to produce the product from raw materials, while for a trading company, it is to buy products from the supplier and sell them to the end users. It is critical to note that operational activities differ greatly among industries. A business activity can be classified as operational in one industry, but financing or investing in another. For instance, buying a building is typically an investing activity in most industries. However, it is an operational activity for real estate companies. Given that the purchased building is intended for resale, operating expenses are important because they can help assess a company's cost and stock management efficiency. It highlights the level of cost that a company needs to make to generate revenue, which is the main goal of a company. If a company incurs relatively higher OPEX as a percentage of sales compared to its competitors, that may indicate they are less efficient at generating those sales. The disadvantage of looking at a company's OPEX is that it is an absolute number, not a ratio. Therefore, it is unreasonable to be used as a metric to compare between firms even if they are in the same industry. However, they can be highly instrumental in the horizontal analysis, since it can reflect the company's current performance in the past. Let's summarize our today's topic. 1. Operating expenses reflect the operational activities, not the investing or financing activities of a company. 2. Operational activities are a company's key commercial activities in generating revenue. 3. It is important to distinguish between operating expenses and capital expenditures, as the two are treated differently for accounting purposes. We will compare operating expenses and working capital expenditure in next video.